All right, trade pros. Good morning, everyone. Welcome to Morning Market Update for Friday, July 6th. It's George Papazov, Trade Pro Academy, and the henchman here, Marky and Victorio, in the office today. We got a good update for you. Today was a huge report, the non-farm payrolls jobs report number. We came in a little bit earlier and traded that number. Vic did good. He got green for the day before the bell even opened. I had a couple trying trades that got stopped out, and the third one worked like a charm. Got paid on it as well. So it's a good start to the day here. I'm going to talk about non-farm payrolls today predominantly because it's going to take the most of the time, and then we're going to talk about the U.S.-China trade war, and I'll give you guys an update of what to watch for on the calendar today. There are two more really important reports for the rest of the day. All right, let's get started. First and foremost, my cheesy joke: pull out your passports. We're going to get some stamps on those pages. And I'm guessing your passports are filling up by now. Let's go to Japan, 1.1% higher in the market. Hong Kong's up 0.5%. China's up 0.5%. India's up 0.2%, which is ludicrous. I'll tell you why in a moment. In Europe at midday, London's down 0.1%. Paris is up 0.1%, and Frankfurt's up 0.1 percentage point. Flat across European equities. And in the United States, the futures are down a little bit. 0.2% on Dow, SPOO's down 0.1%, and NASDAQ down 0.1% as well. So the biggest gains of the day happened in the Asian session on the Asian markets. And knowing that, that's sort of a strange thing considering the fact the U.S.-China trade war is actually it's officially starting. Shots were fired. All right, so far it was talk, now it's becoming official. We'll talk about that in a moment. Crude oil down 0.3% to 72.73, but now trading 72.42. And a little bit of a rally here on the pit session open in NYMEX or on the oil market. Gold's down 0.3% as well. Bitcoin's down 0.5 percentage point, holding around 6,500. That seems like a nice value area for Bitcoin. It seems like it just hangs out around those mid 6,000s. Again, I mean, I'll sound like a broken record. Above 7,000, you get a chance to run back to 12. If we get below 6 again, we're going to 4,400 on Bitcoin. Let's talk about today's economic calendar. There's a few things in there. The first one at 8:30 was non-farm payrolls. At 10:30 a.m., you're going to have natural gas inventory. 10:30 a.m., we got inventory of natural gas. It's usually on the Thursday morning, but the reason that it's Friday is because the oil inventory was on Thursday because it got pushed from Wednesday, and that's because of the holiday in the United States. All right, so we have natty gas at 10:30, and at 1 p.m., we got Baker Hughes rig count, which is an estimation of the amount of offshore drilling or rig counts in the United States, so what they produce. It'd be interesting to see what the rig count is with the oil price going up so much and this new OPEC production deal. So you got that at 1 p.m. There's going to be a lot of volatility around the energy markets today. We are going into the close of the first week of trading for the second half of 2018. So that's kind of exciting. Let's talk about non-farm payrolls. At 8:30 in the morning, the report came out, and this report kind of stunk. Honestly, it wasn't a good report. It missed. The numbers missed, but the market ripped, and I'll tell you why I think that is, and then faded. Vic, can you check if we're at the pre non-farm payrolls level or no? We'll just look at what it was at 8:30. Vic will get back to us on. We're lower. Yeah, there you go. Now a little bit of a head fake rally on non-farm payrolls, and we sell off. I got the downside trade. I started fading them after letting the rally expire out, and then we saw a nice turning point across asset correlation. We got short. Non-farm payrolls, they came out at 213,000 versus 195 expected. That number was higher. Most amateur traders will look at that number and say buy, and get all crazy, not understanding there's like a whole iceberg underneath the surface, right? It's sort of like they're steering the Titanic and like, it's a small little chunk of ice, and you hit it and your ship sinks. So the number that shows up on the print, the one that's the most publicized, that one's irrelevant at the end of the day when it mixes in with everything else. It's not irrelevant, but it's less important. So it came out at 213,000 versus 195 expected. That's a beat, right? Well, let's look at this. The prior month was 223,000. So no, it's not a beat. It's less than the prior month. Just the expectation went lower. All right. If you had an expectation from one of your friends and they came through on a lower expectation than what you expected, that's not a good friend. Full-time employment change, only 9.1 thousand jobs added versus 30,000 expected. That's a huge miss in full-time employment. Here's a catch though. Part-time employment added 22.7 thousand jobs versus 10,000 expected. That's a beat, but that's not a good thing. Less people having full-time jobs means there's more people getting two part-time jobs to pay the bills. Not a good thing. That's not a good report. All right. No revisions to prior month, and prior month was also in the same trend, in the same direction. Unemployment rate goes up to 4% from 3.8% versus the 3.8 prior. So unemployment rates are ticking back up, and that supports the lower full-time positions. All right. Average hourly earnings are down 2.2% versus 0.3% versus 0.3% expectation. So year over year on an annualized basis, it's 2.7% versus 2.8% of average hourly increases. January's hourly earnings of 2.9 was the highest since 09. So we are coming off the back of a really strong report for May's numbers that was reported in the first week of June. But June's numbers that are reported today, the first Friday of July, are bad. They're not good at all. And initially, the market knee-jerked higher on the fact that, first of all, the print beat the number. And that's kind of where I think that some of the less seasoned traders jumped in and bought it. And then the big money, the pro money, just waited in to top out, let the amateurs get in, and they just started hitting bids and taking stops lower. So what we're seeing here is a knee-jerk reaction higher. Maybe initially the market had assumed that a weak jobs report means the Federal Reserve may not hike rates as aggressively as they've led us on to believe, but that's one single number. And I don't think the Fed's going to change their entire course of action over one NFP print. All right, but there is that. However, this report is weak. And I think that this weak downside momentum could spill into the U.S. session open. And if we do, you're going to see a lot of money in paper exit going into the weekend. So look for a little bit of downside to open the U.S. today. Fade rallies, that should be a good start. If fading rallies is on low volume and you see a reversal, get long. All right, it's as easy as that. You don't need to complicate things and overcomplicate. In fact, find that most traders who have a challenge being profitable and getting successful is an issue of overcomplicating. All right, you analysis paralysis. You look for so many confirmations, so much information, so much data. I need to know, and then the trend passes. And now you know, but you didn't make any money. So what good is it to know, right? Are you in the business to know or to make money? And that's sort of the tip that I'm going to give you guys for myself personally, because I battled with that too. I've been through the entire process. I've been through the ups and downs. My life's been a crazy roller coaster. Really surprised I'm still on the tracks, to be honest with you. Let's talk about this U.S. trade war. We're ending off here. Beijing's implemented retaliatory tariffs against the United States to the tune of $34.5 billion worth of goods. That matches what the United States has implemented yesterday. Up until this point, it was just talk. Yesterday, Donald Trump made it official. China vowed and swore to retaliate as soon as the U.S. made these measures official. The U.S. did it. China retaliated. What did the market do in the evening session? It ripped like 15 points right on that news. However, I'll tell you guys this. Asian session U.S. equity moves are not to be trusted or relied upon. That was a low volume rally. That's a nice little short squeeze by the algos, and then we took the market lower. So anywho, they're saying another 16 billion is supposed to go into play. Donald Trump has said that if China retaliates, he's going to add $500 billion worth of goods. He's going to apply tariffs to them. China's already retaliated. So now the ball's back in Donald Trump's court. If he makes this move, this is going to spark panic. We're very close to a massive sell-off. If Donald Trump turns around and throws a $500 billion tariff, that's suicide. And you're going to say, well, so what? China's right now, the U.S. market is holding ground, but China is tanking. They're in a bear market right now. Many people don't realize it, but Chinese stock market, most of them actually are in bear market territory because of this. So China's taking a hit. And then you're going to say, well, it looks like the U.S. is winning the trade war. And yes, that's correct, but that's a short-term win. Think about the longer-term implications. What if those countries that have traditionally bought U.S. treasuries or that traditionally deal in U.S. dollars because it's an international currency start doing business among each other, amongst themselves, without getting the U.S. dollar involved? U.S. dollar demand dries up. The dollar could potentially lose its reserve currency status, and then it's trouble. And then when you can't issue bonds in your local currency like the U.S. can globally, they're the only ones that can because they're the world reserve currency, then I don't even want to talk about it because it could get really bad. So even though this market is holding ground a little bit more, believe you me, investors and traders around desks around the world are a lot more nervous and on pins and needles than what mass media is leading you to believe. Right? There's confusion and a general tone of fear, and we don't know what's going to happen. I'll tell you guys this though: we're going to make some profit when it does happen, whether it goes up or down. Up or down, we make the money. We don't play around. You guys have a great day. I want to wish you a really awesome weekend to you and your families. Take some time, relax. It's a hard job we do, and we need some time to unwind. So all the best. Have a great weekend. Thank you for tuning in this week. We got 2 great videos coming out on Saturday and Sunday at 3 p.m. Eastern on YouTube. Strongly suggest that you guys watch them. All right, that's all I got for you. Like, comment, share, subscribe, and when you do subscribe, ring the little bell so you get notifications, because we're live every morning at 9 a.m. and you'll be notified if you ring the little bell by the subscribe button. Take care, guys. Great weekend to all. And to all a good night. Bye. Thanks, Marky.